Do you want to organize your finances, create wealth, and transform your wealth into a legacy? It's time to start today.
Welcome to Octane. My name's Andrew Wall. I'm the managing partner at CPA for IT.
And I'm Rachel Stedman, head of customer care.
Our new podcast designed to give your small business the fuel it needs to succeed. Welcome back, everybody, to our second episode of Octane, our new podcast for small business owners. This week, we want to talk about sales tax and specifically GST, HST. I want you to welcome back my co-host, Rachel Stedman. Rachel, thank you for joining us.
Thank you, Andrew. Definitely a pleasure to be here again.
Well, I think this is a really important topic for small business because sales tax, obviously, knowing when to register, how to register, whether you need to charge GST or HST or nothing is a really important step for small business owners to know, particularly when they're starting out. So maybe we can start by just simply explaining what GST, HST is. We're here in Ontario, so we have HST, which is sort of harmonized sales tax. So a harmonization of the GST and the provincial sales tax. Depending upon the province that you are in, you might have only GST, or you might have GST and PST, or GST and QST, or just HST, and that can get confusing. And then, of course, when you have customers in different locations, what rate are you supposed to charge? And so this can get really confusing, especially when you start throwing in multinational jurisdictions like the US and even overseas. So let's start with it at its simplicity, which the simplest thing to know and understand about GST is it needs to be charged based on where the benefit of the service resides. So that is the overlying principle. I think the other thing that's really important to know is that there is a special hotline within CRA separate from the CRA dial-in number, and I think Rachel can probably dig that up for us.
I can.
There's a special hotline that you can call in if you do have any questions or you're in doubt at all about whether you should be charging GST, HST, PST, QST, and whether you need to register in these different provinces for these different sales tax. But what I do want to make sure is everyone is aware is that the overall high level understanding is that you charge based on where the benefit of the service resides.
That is important.
So if you're selling a product or a physical good on Shopify or something like that, it should be pretty straightforward. You're charging based on where the individual is ordering from. When we're selling services, it can get a little bit more complicated, particularly when we're dealing with large organizations that might have many places that benefit from that software development service that you're providing. Generally speaking, if you have a US-based client, we're going to say the benefit of the service resides in the US and there is no need to charge HST or PST or whatever the case might be for your individual location. But if your end client is, say, here in Ontario, then you would charge HST. And that would be true even if you were in BC or Alberta, which are going to have different rates than Ontario. You would charge the Ontario rate because the benefit of the service would reside here in Ontario. Now, I think that's the high level. Now, Rachel, maybe you can get us into a little bit of the weeds on what's that support number people can call? How do people actually register for a GST, HST number? When should they register for a GST, HST number? And when do they have to? Because those are two different things, right?
Those are the key ones. Now, when we're looking at registering a GST, HST account, you can actually call the general CRA line 1-800-959-5525 for the registration. Yes, they do have a separate line in terms of more of that ongoing support.
Can we get that number one more time, just a little bit
slower? 1-800-959-5525. It's creepy how I know this number better than I know my mom's.
I know, right?
So yeah, so I mean, that's the registration part. A lot of clients are very unsure when they have to register, especially if they're making over 30,000 or not. So the general rule of thumb is that if you are generating income or revenue over $30,000, you are mandated to have a registered GST HST account set up. So a lot of people think, oh, well, I'm not making $30,000, so I don't need to collect. Now, although you are correct, you don't need to collect, there is still a benefit for the individual to have a GST HST account, because they're only thinking about, oh, what I'm collecting, but they're not factoring in, wait a minute, I'm paying HST on my expenses. So you want to be able to benefit from those input tax credits of the HST that you're paying on your expenses. So I tell clients, look, once you're self-employed, you're in business, set up a GST HST account. It is a benefit to you. The other thing as well is a lot of clients think, well, you know what, I have a US client or, a foreign client that, well, I don't need to collect the GST HST, which, although that is correct, you are still required to have the GST HST account number because your revenue is still over that $30,000 threshold. So although you'll essentially be filing the GST HST saying, hey, I generated X amount of income, but I collected zero HST because it's foreign and I'm paying back, zero of what I've collected. So yeah, so I think that's a bit of a misconception a lot of people have in terms of registering, that it's only if the benefit is only if it's over 30,000 and only if they are generating income in Canada.
Yeah,
so
and
that's the most important thing.
That's where the requirement comes in for sure. Like you're obligated.
Yes.
After that point, you are obligated to. And by the way, if you haven't registered for GST, HST, and you've crossed that threshold, you're basically going to either have to go back to your client and collect it, or you're going to have to pull it out of the revenue that you had and assume that that's the gross, including the HST, whatever you collected from your client. If for whatever reason can't go back and collect the GST, HST, because CRA doesn't care. Once you've crossed that threshold, you have crossed that threshold from their standpoint. And I think what Rachel's pointed out is really important here is there is a benefit to many small business owners to being registered for GST, HST far sooner than they are required to. If you have a situation where you have a US-based client or a client where you do not have to, they're exempt from HST for whatever reason, and you don't have to charge them GST, HST, as Rachel said, you're going to have all these input tax credits, what we refer to as ITCs. This is the money that you paid on all the GST on all the expenses that you have for your business. And when you file your GST, HST return, you'd say, I collected zero, but I have these input tax credits. So that effectively creates a loss on the GST return. So, Canada, give me my money back, right? Show me some money.
Yes.
And this is a huge benefit, particularly when you have, no eligible taxable HST revenue. But in addition, if you're a small business, you're under $400,000, you're eligible to register elect for the quick method of HST. And Rich, do you want to maybe give them a quick breakdown of the difference between the quick and the regular, or the quick and the long method of HST?
Definitely. So the long and short of it is essentially the long method stipulates that whatever GST you collect from your client minus the GST on your expenses, then you pay back the difference to CRA. So it really does require, real proper calculation with your bookkeeping on a regular basis to ensure that you are separating out the HST on your expenses. Whereas the quick method is a little bit different. It doesn't really factor in what your actual total expenses are. It's really based on your revenue. So it's calculating based on approximately what your revenue is. CRA has a calculation says, okay, you know what, you'll pay based on that. Now, the other thing that's important with the difference with quick method and long method, some clients, they don't know which one should I have, right? So again, the determining factor.
We do have a calculator on our website, by the way.
We do.
I will point out, we have a calculator. It's a simple spreadsheet. And basically what you need to know to understand which method is better, because it can change year over year, and you can change your election. Now, you can't change your election after the fact, but you can change it for next year.
In advance, yes.
And basically the difference is, what you want to figure out is, is the amount I collected less the amount I've paid on my expenses more or less than the mathematical calculation of the quick method? And the reason Rachel didn't give you the numbers is because it's different depending upon your provinces.
Yeah. Yeah.
I'm going to use Ontario here for an example. It's 7.8% on the first 30,000 and 8.8 of everything above that. Or an easier calculation is if you just say, hey, 8.8 on all of the revenue. And the key here is all the revenue, including the HST that you've built, which is, I'm not sure why, but that is the formula. And then you take off $300, because if you're over $30,000, 1%, or 8.8 versus 7.8, that's a 1% difference, right?
Mm-hmm.
So 1% of
$30,000.
$30,000 is $300. So
Yeah.
that's how you get that math. So you can just multiply it by 8.8%, your total revenue, subtract $300. That's what you pay on the quick method. And then the long method, unfortunately, you do have to go through the hard work of, how much am I going to have in expenses? How much am I going to have in revenue? And sometimes the easiest thing to do is just look at last year and just prorate. Say, hey, I think my revenue is going to grow 25%. It's going to grow 10%. It's going to shrink 10%. And then, of course, my expenses, are they going to grow? And then you can just take that, put it in a spreadsheet, and do some quick
Like the numbers.
Do some.
The
quick
other thing,
calculations.
Andrew, that I normally tell clients as a quick way to really kind of determine which is the better option for you has a lot to do with how much HST you think you're going to be collecting versus what you're going to pay out. So for example, clients who are having foreign revenue where you're not collecting that GST, HST, it is better to be on the long method than it is to be on the quick method. Or clients who have a lot of sales tax that they're paying out. So meaning you have subcontractors, so you tend to have
you're in manufacturing or
exactly, where you just have in general a lot of GST, HST that you're paying out on your day-to-day expenses, then again, the long method is the best option for you. So there are those, quick scenarios where we can kind of see based on what you're doing, how you're operating, what is the default best option for you.
Yeah, so if you're in a service-based business and you don't have a lot of capital costs or you don't have any subcontractors, a lot of the times the quick method is going to be better for you. But it's important to take a look at your individual situation, because if you do have a lot of subcontractors, or for whatever reason you're spending a lot on supplies, and the key here is spending a lot on supplies and expenses that have HST. Because if you're buying a bunch of stuff, but you're bringing it in, like we had one client who has a Shopify account, and they're bringing all their supplies in from China. There's no GST, HST on it, right? So it wasn't necessarily a great fit, even though a lot of their revenue was coming from outside of Canada. They didn't have a ton of ITCs. They didn't, have, a ton of revenue that had HST. So we had to really do a lot of different calculations to figure out what's better in that situation, even though the default is like, oh, you are a low margin business where you're doing a lot of volume and you have high costs. The assumption would have been that the long method is better.
Would be the best.
But it wasn't necessarily true. And it did change year over year, depending on that situation, based on how much Canadian revenue that they had in that individual year.
Another important thing, Andrew, is that to note is when you register the GST HST account, you are actually automatically defaulted to the long method. If you want to select the quick method, it is an application that you have to do. And actually, you have the first quarter of your GST HST tax year to be able to do the election for the quick method. Okay. And then for some clients who maybe they're figuring out about the GST, HST, maybe, the third quarter in, it is too late for that year, but you can then on the next GST, HST tax year, apply for the quick method application. So that's the important thing. It's that you must apply for it, or more so opt in to have the GST,
elect
quick
is
method
the term.
Elect, that is true. Yeah. Elect for that election.
Now, the other thing I think that's important to touch base on is there are a lot of defaults on how the CRA will set up your HST account number or your GST account number.
Yes.
And many times those defaults are not what you want to have set up. So I think a couple of the defaults that I'm aware of is first of all, they're going to put you on quarterly And
December
I believe
31st as well.
December 31st as well. I mean, those, and your year end, it might be December 31st, but it might not be. In fact, most of our clients have different year ends than December 31st. If all of our clients had December 31st year ends, it would be very difficult to manage that workload. And we still have more than I'd like, but if you don't have a December 31st year end, when you set up your HST account, you want to elect to have a different year end for that HST account. And again, as Rachel says, until you filed your first return, you're not really locked in, or you're late for your first return. So you do have a little bit of time to make some changes, but once that time passes, you're in a bit of trouble. And I think one of the other big things to do, and this is why arguably the most important thing to do, is to make sure that you're filing annually as opposed to quarterly, because if you do need to change something, you've got a longer period to change it over.
That is correct. Yeah, yeah. And that's the thing too, you know, I tell clients whenever they're, you know, setting up their own GST, HST on their own, I said, look, CRA is always going to want you to have that set up based on what's in their best interest. There's a difference between what's mandatory and what's optional. If you're collecting sales tax, is it mandatory that you file a GST HST return? 100%. Is it mandatory that you have it quarterly? Not at all. Okay, so it's optional. There is a certain threshold of income that your business is generating where you are mandated to be on a quarterly basis or even on a monthly basis. Okay, but it's always best to select what is in your best interest, right? So that's the one thing. And the other thing as well is, you know, a lot of clients with having that defaulted December 31st year-end date that CRA sets up for them, it makes your bookkeeping a little bit more complicated, because now you have to do a January to December for GST, HST, but maybe, you know, June to, you know, May for your corporate tax. So it makes it a little bit more difficult for you. Now, even if your you may have a GST, HST year end that does not sync with your corporate year end date, you can still change it. Now, granted, you have to change it after the fact, okay, which requires us to do, you know, 2 GST filings within one corporate period, but we are able to eventually change that. So, you know, the takeaway I always tell clients is that, look, you know what you do best, okay, and we know what we do best. And, you know, that's why it's really best to really hire a professional that can really help you and iron out those kinks, so you don't have to be going through those things, right? And really just a matter of us helping you to set up what is in your best interest. Even, for example, the quarterly filing of the GST, HST, you know, sometimes clients, they're not aware, or they're late, or maybe you didn't do the calculation properly. You're doing this on your own. Now we have to make adjustments. Now we got to be amending. So you're essentially doing the same thing 4 times, when maybe you only need to do it once, right? Yeah. And, you know, some clients also think, well, you know, I want to do a quarterly filing because I have this GST I'm holding and I just want to pay it to CRA. And I say, look, there's a big difference between filing quarterly and paying quarterly. You can pay if you say, look, I want to get this money out of my account. I don't want to think it's mine to be spending. You can pay quarterly, which doesn't obligate you to file quarterly. Right.
And in fact, after your first year, odds are you're going to be forced on the quarterly installments, because
that is correct. Yeah.
If you owe the government more than $3,000 for anything, they want installments on that.
Automatically on installments.
GST, most clients in your second year, you're going to be on quarterly installments, whether you want to be or not.
That is true. So yeah, so it's just a matter of, again, you know, CRA will always, you know, opt for what's in their best interest. Of course, they want to force you to be filing, force you to be paying, you know, right off the bat. Or I've actually even seen a client that was on monthly GST, HST filing, and you know, was only making under $100,000. Like, I thought that was a bit aggressive, right?
Yeah.
So, you know, again, hiring a professional really just kind of helps you to make sure that you don't have to worry about these things, and, you know, save yourself a lot of the headache.
Yeah, an ounce of prevention is worth a pound of cure, right, as they say. But I think, you know, there's a ton of stuff that you need to know as a small business owner. GST, HST is just one of those core areas. We're dedicated to coming back on a regular basis to give you guys more content. So this is episode number 2. We will be back with episode 3, 4, 5, 6. And in fact, we got 36 episodes at least planned that we're going to be coming back with you. I will just close off by just giving everyone the rates as of today, which we are sitting in 2022. for those who want to know. Alberta is GST only and it's 5%. British Columbia is GST and PST, 7% PST, 5% GST. Manitoba is GST, PST, 7% and 5%, much like British Columbia. New Brunswick is HST at 15%. Newfoundland and Labrador, HST at 15%. Northwest Territories, GST at 5%. Nova Scotia, HST at 15%. Nunavut, GST at 5%. Ontario, HST at 13%. Prince Edward Island, HST at 15%. Quebec, GST and QST, the only province that doesn't have PST or that doesn't have HST or PST or just GST. And they're at QST of 9.975% and GST at 5%. Obviously, GST is 5% everywhere. Saskatchewan is GST and PST, so 6% PST, 5% GST, and the Yukon is just 5%. And so when I say GST everywhere is 5%, it's just if it's harmonized, it's included in that,
the sales
harmonization.
tax. Yeah.
But yeah, I guess that's everything for this episode. As I said, we'll be back with more content for you guys, and I hope you guys are finding this helpful. If you are, please make sure to like and share this podcast with your friends and your colleagues. Thank you very much, and we'll see you soon.
Thank you, everyone. Have a good one. Bye-bye.